we are going to talk about the OMC counters, that is oil marketing companies. With Brent crude prices still near multi-month lows, is there case for OMCs to go ahead and cut retail fuel prices? Remember that they've been largely unchanged since April 2022 when the Brent prices were near $100 per barrel levels. Somit is here to explain if there is a case for OMCs to lower the retail prices. If they do so, what sort of an impact will it have? And also what other factors are driving the gains for the OMC stocks at this point in time? Somit, over to you.
Well, if you see the retail fuel prices, that is the petrol and diesel prices, they are unchanged since April 7th. On April 7th, Brent crude prices stood at close to $101 per barrel, which has now come down by around 29%. But petrol and diesel prices are largely unchanged. Whatever change you are seeing here of 8 and 7%, that is because of a reduction in excise duty. But the core petrol and diesel prices continue to remain unchanged. Why is this happening? Firstly, in ideal scenario, petrol and diesel prices should have changed on a regular basis because petrol prices were deregulated since 2010, while diesel prices were deregulated since 2014. Now, why prices are not changing? Because oil marketing companies have suffered huge losses. If you see in the first half of FY23, because crude prices were at a high and petrol and diesel prices were remaining unchanged. Now, according to an oil minister, the petrol and the oil marketing companies incurred a loss of close to 27,300 crore rupees. So how is this unchanged retail fuel prices actually aiding oil marketing companies? Well, it is aiding the marketing business because the gross marketing margin is at a record high. Now, if you see on sale of every liter of petrol and diesel, the oil marketing companies are earning close to 9.9 rupees on petrol and 5.2 rupees on diesel. That is on the first quarter of FY24. Similarly, in the previous quarter, that is Q4 FY23, the profits on sale of diesel was stood at close to 2.3 rupees, and that on petrol stood at close to 9.6 rupees. But before that, if you see, there were losses on diesel and petrol, and to recoup these losses, oil marketing companies are keeping petrol and diesel prices unchanged despite a sharp drop that we have seen in the Brent crude prices. So when can fuel prices now start changing? Well, it's difficult to give a timeline on when the petrol or diesel prices could start changing, but let's look at the micro scenario that could at least give us an idea of when it could start changing. Firstly, if you see, the CPI has cooled off to a 25-month low, so inflation is not a problem as of now. Demand is also not a problem despite high prices because there has been robust demand. In fact, in the month of May, if you see, fuel demand was up nearly 10% on a YOY basis. Also, there is no state elections till December 2023. Now, usually in past, we have seen that whenever there are major state elections or general elections, petrol or diesel prices cool off, but that is not happening till December 2023. Also, as per analysts, oil marketing companies would need time till September 2023 to at least recoup the losses that they have incurred in FY20. So this gives us at least a fair idea of when petrol and diesel prices could start changing. Now, apart from the fact that there are not oil marketing companies are earning higher gross marketing margin, there is one more positive factor, and that is on the refining front. Now, despite the fact that the global GRM, that is Singapore gross refining margins, are subdued, the gross refining margins for Indian oil marketing companies or oil refiners would still be at record high because they have been importing Russian crude. Now, as per May, nearly 42% of India's import was from Russia, and Russian crudes are available at a cheap discount, which is thereby further aiding the refining margins of these oil marketing companies. Also, the valuations of the oil marketing companies are still at a 5-year low. Now, Indian Oil Corporation's 12-month forward valuation stands at close to 6.4 times as against their 5-year average of 6.5. Similarly, for BPCL, the 12-month forward valuation is at 8 times, while the 5-year average stands at 9.2. And for HPCL, the 5-year average is at 5.8, while the 12-month forward is at 5.6 times.
Thank you so much, Somit, for highlighting what all factors are at play for all these OMCs, because we are seeing all these counters buzzing in the recent past, as well as how the valuations are stacking up right now.